Today's show is brought to you by Nasdaq. Ben, Todd Sohn made an incredible chart showing the declining percentage of the S&P 500 of the consumer staples sector.
Okay.
The consumer staples sector. So Costco, Walmart, Pepsi, like maybe some of those are discretionary, but like things that you can't live without, right? The staples are smaller, the whole sector, than Microsoft, than Nvidia, than Apple. So the
individually?
Nasdaq,
I didn't know that.
The Nasdaq 100 swallowed the consumer staple sector. I mean, a long time ago, but now just individual components are bigger than the entire staple sector.
So Nasdaq tells us that the Nasdaq 100 started in 1985. 8 of the 10 biggest companies in the world are in it. It's in the same. It's like on the heels of the S&P in terms of name recognition now, as terms of a benchmark. I feel like this is all happening, right? It's getting there. It's very impressive.
I mean, how about this? If you told me 10 years ago, I would have been like, come on, right?
Yeah.
It would have been unthinkable. But yeah, you're right. The gap is definitely closing.
Yeah. So the largest Qs ETF is the Invesco one. It's $300 billion or more now.
How much is in SPY?
assets?
Probably more. Probably double that, I think, but still.
Yeah. So yeah, it's very impressive. So if you want to learn more about the Nasdaq 100 ecosystem, check the link in the show notes and visit Nasdaq.com to learn more.
Welcome to Animal Spirits with Michael and Ben. It was almost a catastrophic rug pull in Michael's FanDuel account over the weekend. And it's not about my money; it's about you, Ben. And I feel for you. That was one swift kick in the pants. How are you feeling?
As a Detroit Lion, I tweeted out after the game that I've always kind of wondered what it must be like to be a perma-bear and just lose all the time. But I know because I'm a Lions fan. I know what it's like to be a perma-bear now.
I felt your pain. That was tough. That was
So I've never seen, because the college sports are very big in the Midwest. So in Michigan, but we have Michigan fans and Michigan State fans and Ohio State fans and Notre Dame fans.
So let me ask you, like, how big of a Lions fan are you?
Well, the thing is,
were you okay the next day, or?
Oh no, I was depressed all weekend. I was extremely depressed. My daughter kept telling me, like, stop telling me how depressed you are. And I can't, I'm sorry, I got to stop talking about it. But no, I've always been a bigger college fan than pro fan, but I've really gotten into, I've followed the Lions forever, but it's not like I ever had my heart really into it because they were like the laughing stock of the NFL for years and years and years.
And now, to make matters worse, not to pour salt in the wound, but yet Ohio State win last night, which probably was whatever.
No, I'm okay with that because Michigan beat them. So
but
Michigan is a de facto back-to-back champion, so I'm okay with that one.
But you're losing your offensive and defensive coordinator. Like, this should have been the year.
Yeah, no, it's there's no positive spin on it. It was, but I mentioned like all the different college fans in the state of Michigan, but for the Lions, every Saturday and Sunday, I've never seen more Lions gear. Like everyone was into it. It was like the whole state kind of shut down, and so yes, unfortunately for the Lions fans, it's painful. But I was expecting it, so we move on.
I wasn't, considering the wagers in my account, but I was bailed out by the Bank of Buffalo. Shout out to Benny Markets. Yeah, tough loss. Okay, one quick plug. I think we said this before, but I'll say it one more time. Me and the team are coming to Naples. Josh and I are doing a live TCAF with Brian Belsky, which is sold out, unfortunately, but we're going to be there the week of February 17th. So we're coming in the 19th, Wednesday. We're out of there on the 21st or Friday, but we are meeting with clients and prospective clients and advisors that want to talk and learn about what it's like to be an advisor here at Ritholtz Wealth Management. So if you want to learn more about meeting us, info@ritholtzwealth.com.
And we tried to get a Batnick Carlson family trip together for this, but I'd already had something else planned. It was the last minute. I blame you for asking me too late. But we tried.
Okay.
One of these years.
All right. So I was on the train. Where was I Saturday night? Oh, was it Saturday or Friday? Friday. I was at the Knicks game. And I'm on the train and I see this Trump coin. I'm like, what? And I didn't really think a ton of it. And then I thought, wait, should I buy this with the nonsense that's going around, and I'll just continue listening to my podcast and not buy it. So I'm guessing our audience under 40, let's say, has heard of the official Trump meme coin, but maybe our audience, let's say over 50, is completely oblivious as to what happened over the weekend.
Possibly. Yes. And I want to preface all this by saying you and I think, for being labeled TradFi guys by the crypto community, which always seems like a put down when they call you TradFi, like, it's the holier than thou meme looking down.
I'm part Chad.
But I think we've been very fair to crypto over the years. And in fact, we've gotten a lot of people in the traditional finance space who always say, like, guys, stop talking about crypto. This thing is a joke. Don't talk about it. And I think we've been very fair. So I just want to preface any comments we make today with the fact that we have been very fair to the industry. We've had a lot of podcasts on it. 6 weeks ago, our podcast was titled like "The Bitcoiners Won," right? Like we've given praise to crypto. But I think one of the cool things about the industry at the outset was how much hope there was to like change the world and build cool stuff. And it seems like every bull market that we've lived through for crypto, it's been like, hey, listen, we're going to smart contract this. We're going to tokenize that. We're going to make this more efficient. We're going to make that more efficient. We're going to do this. And I kind of feel like this bull market, they're not even pretending anymore.
Okay.
They're not even like pretending that we're going to build something cool. It's just, it seems to me, at least in terms of the attention.
Yeah. But
it's all gambling and meme coins and pump and dumps, and it's kind of depressing.
Yeah, no, I hate it. And this is not, they would label this cope. Listen, I love that there's people that got rich off this coin that like.
Yeah, I don't care about that.
I love that
whatever.
There's people that experience life-changing money. What I hate is everything else. The fact that an incoming president did this right before the inauguration. What I hate is the fact that for every person that made life-changing money, there's people that are going to lose life-changing money. And this is, you say like, we've been very fair to the crypto industry. I don't even think this is a crypto industry thing because most real legitimate people in crypto are not happy with this. They're not celebrating this. This is a shit stain on the industry, and I don't think anybody's excited about it.
But I feel like the industry has celebrated the meme coins and stuff, and I feel like that's where they have made a mistake is saying that like, and I've seen legitimate people trying to say like, listen, meme coins are the thing that get people into crypto. And it's the gambling and speculating that gets people
Those are fringe dumbasses.
But the fact that meme coins have been allowed to be the thing for this cycle, at least it feels like that to me has been the mistake of crypto. And then once the rules are taken away and then all hell breaks loose, then this is what happens.
All right. So I think we pulled some tweets to sort of go through the story to explain what the hell just happened over the weekend. In my opinion, this makes GameStop look like a joke. Right? This makes Fartcoin look quaint. This is the craziest thing I think I've ever seen in financial markets. Like the incoming president did this right before the inauguration. So here we go.
But the Dogecoin and Fartcoin were the predecessors to this.
Yeah.
They had to walk before
yes.
Trump coin could run or whatever, right?
Yeah. So Jim Chanos said, I'm afraid the golden age of fraud may not do justice to the next 4 years. This is going to get a lot crazier. I'm not saying that like this might be the peak craziness, but like throw everything out the window of how dumb you think this can get or how big the numbers can get because it's just going to get crazier.
Well, because the rules have been thrown out. So I think the way that I would like to put this in historical precedent is the 1920s was the first time they really rolled out financial products in like the roaring 20s because things were so happy and crazy and all this innovation and people got absolutely wrecked by these things. And I think and after that, you had to have the creation of the SEC and all these banking regulations. And unfortunately, I think that's what it's going to take is taking all the rules off the table for crypto. Because I saw a lot of crypto people even saying like, oh wait, so crime is legal now? And they weren't kidding.
Yeah.
So I do think that like, yeah, there's going to be life-changing amounts of money to be made, but there's going to be so many people that get taken advantage of and lose a lot of money as well.
Well, hang on. To that point, I think that everybody knows what's going on. So listen, I feel bad when people get rugged and wrecked, but I think at least everybody knows that this is pure gambling. You know what I mean? Like it's a little bit different. I'm not saying it's better, but everybody knows that it's pure gambling. There's no illusion that there's any fundamentals coming or anything else. It's pure gambling. So if you do get wrecked, really that's your fault.
Well, for sure. If you lose money in this space, yes, you take personal responsibility. It's too bad that there are grifters and charlatans that are going to be taking advantage, but Yes, apparently, I guess it's fair game now.
Okay. This is from Vidamo on Twitter. Actually insane that a career grifter managed to surprise a whole industry of grifters who were expecting him to grift with unprecedented levels of grifting. Well said. I have nothing to add.
Yeah.
Chairlift Capital. I fully understand why China banned crypto. This is collapse of society type stuff. So to reiterate or to iterate, because I don't think we said this earlier, I don't know what percent of the float that Trump owned. Is it 80%? It's some ungodly number. So
Yeah, it's a
normally
very high number.
with a meme coin, the developers will own, I don't know, 20% of it, right? With this, Trump owns almost all of it. So the supply is very, very, very small. So, yeah, this is, I think if there's, I'm like really grabbing for like not going to dark places. I think this is a much bigger online story. Like, I don't think that like most of the population understands, thank God, what's going on because it's so fucking dark.
Right. I don't think my parents would get this.
Right. Like it's so dark.
No offense, mom and dad.
Somebody else tweeted, Gary, come back, you were right. In reference to Gary Gensler. I was listening to Joe and Tracy this morning with Austin Campbell, I believe is his name, who is a serious person in the crypto industry, like stablecoins, professor, banking, like the whole background, like a real person. And he made a great point. Gary Gensler caused so much damage because he created the crypto army. Had he just let these damn ETFs come into existence,
Right.
he would not have galvanized an entire group of people against him that Trump then galvanized to help win the election and, you know, contribute to all the craziness that's going on. Right
whatever
now.
he was trying to hold back on, like what did it accomplish?
Well, it boomeranged. It
Yes,
had the opposite intended effect.
Yeah, it did whatever they were fighting against. It had no positive benefits.
No, he
right?
didn't. No, he didn't do anything helpful. No. Okay, here's another one from Chairman Bernanke. Look, you have to admit, it's at least a little funny that the guys who spent the last 4 years screaming about how corrupt Nancy Pelosi was for buying Qs and NVIDIA are just straight up doing crime in the Solana meme coin trenches.
Yeah, it would be nice if like at least part of the ownership came with like, hey, if you buy this coin, we're going to send you some Trump sneakers and Bibles, right? But they're not even pretending like this is anything other than a transfer of wealth.
And then Noah Smith wrote a post on this, and he was basically saying, listen, if somebody wants to bribe Trump, like how would you stop it? If somebody's just buying Trump coin, how could you prove that there's any, you know, it's like what? I think the coin's going to go up. I'm not allowed to buy something that I think is going to go up.
Yes, I think that's the scary part is that this and the fact that he's putting people in positions of power for regulations that are going to look the other way if anything did happen. So it doesn't matter.
One thing we didn't mention is that from the time of launch until a peak, it was up. I saw a stat like more than the S&P 500 over the last 45 years or some crazy number. It was up like 50,000%. It went from 0.00 whatever up to a $70 billion market cap like overnight. And it's down by half, but still just wild stuff. All right, I think Howard had a pretty sober thought on where we've come and where we're going. Howard said, latest Trump and crew grift being bad for crypto, I've been telling people the following. People still went west when they heard their friends were killed by Indians. Now, whatever, I don't know if it's a perfect analogy, but I think it's pretty good in the sense that like crypto is still going, like digital, stable coins, tokenization, like all of that is still coming. And this clown sideshow is not going to stop it. It's not going to, it just, so I think that was a good way to think about it. Yesterday.
Right, they still, the ETF was a big deal. If Bitcoin is able to supplant gold as the digital gold, that's obviously a huge deal. The stablecoin thing is a big deal by allowing people in other countries to get access to the dollar in a stable way. Like that stuff crypto has made inroads. I just the fact that this stuff just sucks out all the oxygen out of the room. And we know that there's smart people in the crypto industry. We've talked to them, we've met with them, we know some of them. But it seems like they're being pushed to the side very slowly but surely.
No, I don't think so. I think the loud voices. Again, I saw a few real crypto people cheering this on. I think
I saw a lot of them saying like, I can't believe this is happening. This is not what we signed up for.
This completely delegitimizes a lot of the work they're doing. So yeah, it's nasty stuff. All right, and Ben, perhaps the coup de grace. There was a pastor from Detroit yesterday at the inauguration that did some speaking, and he launched a meme coin, or there was a meme coin launched and it was given to him. I don't know, but he did a video, encouraging people to buy, what is this? A Lorenzo coin. I just come on.
I mean, the hope is that, fine, every charlatan and grifter does one of these meme coins, and there's so much supply that eventually people just stop caring and it stops mattering, and enough people lose money that they go, okay, I'm not going to gamble on this stuff and speculate anymore. Because you mentioned like the returns going from 0 to 70 billion or whatever. Of course, that's astronomical. What was it? A dozen people who did it, who got in at the very beginning, and I mean, that's
wait, hold on. There was, how many wallets were there? Was there a million or 100,000? There was a lot of people, dude. Like
that bought it.
A lot of people bought this.
Yeah, but I don't know. It's just, did you see? I saw this meme going around from The Big Short where Steve Carell as Steve Eisman says, "I don't get it. Why are they confessing?" And the guy says they're not confessing, they're bragging. That's the stage we're in. And again, I saw a lot of level-headed people be like, okay, what is like the game theory here of if there really are no regulations, no rules, and very shady gray area stuff is available, what does that mean? And some people say this could end up being bearish for crypto. Other people say no, numbers to the moon. And I don't think that you could possibly have a take bullish or bearish from here on what that means.
I think crypto is like a freight train, and this is just like a rock that gets in the way.
I do think though this kind of stuff, enough of it could end up being a very big black eye.
It already is. This is horrendous.
Yeah. If he opens up the curtain and it shows like, okay, this stuff means nothing to me. Maybe it means nothing to the people who care about this. That's a bad precedent to set. Like none of this means anything. It's all made up. If people start thinking that and that takes hold, that is not a good narrative to have. Because part of the reason crypto has gotten so big is because the narrative has been positive. It's innovation and we're digital money and all this stuff. If that narrative starts shifting, that's a bad thing for crypto. Right? Because we know there are no cash flows. There are no behind it.
I don't think that's going to happen, but I would take nothing, I would take nothing off the table. Anything is possible. All right. Sort of related, but for our advisors out there, Mark Meredith tweeted, "Politicians are clearly above the law, while somewhere there is a financial advisor getting fined for texting a client and not archiving it properly."
Amen.
And that's not just for our industry. You can, every industry could say something similar about dumb regulations that, are onerous.
Right. Yes. I think if we wanted to launch an animal spirits meme coin, our compliance officer would have a problem with that.
Probably. In a similar vein, there's now over 100,000 CFPs. And I don't know, Ben, we've been getting a lot of emails in our inbox from younger people going down the CFA route. And we've said it before, and I will probably say it in future episodes. If you are looking to get into the wealth management industry, the CFA is the wrong designation.
Definitely.
Okay? It is the right designation if you are trying to be a true analyst at a bank or something like that.
Portfolio manager, security analyst, research analyst, that sort of thing.
Yeah. So am I saying that you can't thrive in this in this industry with the CFA? No, that's not what I'm saying. But if you're a young person, you're like, hey, which one should I take? The CFP is 10 times more valuable. Okay. And it's reflected in the numbers of people that are taking the CFP versus CFA. There's
going to be so much need for financial advice in the years ahead. That to me is the biggest bull market over the next 20 or 30 years, is taking care of all the trillions of retirement assets for baby boomers.
Yeah. Okay. So I want to just put a bow on this. Kyla Scanlon said, traditional limits like physical constraints, geographic boundaries, or institutional checks stop mattering because digital attention moves instantly and globally, while narrative overpowers physical reality. Once this feedback loop starts, it's self-reinforcing. Attention creates wealth, wealth enables power, power shapes perceived reality, and reality drives more attention. So this is the world that we live in. You probably hate it. I hate it. It's not going away. So
No.
I'm not, I don't know. I don't know. I'm trying here. Deal with it, I guess. That's what I'm trying to do.
The biggest thing for me that I think is the detraction in society is the fact that there's this idea, I think for a lot of people, especially young people, that everything that happens online is just not real life, and you get this like nihilism about the internet, like, well,
Yeah.
nothing people say and do matters. And the fact that that's bleeding into real life, and you get this financial nihilism, and well, nothing matters because it's okay. It started digitally, then it gets into real life. That is the part that scares me. That if you have this nihilism view of the world, that nothing matters, LOL, it's okay. Everything is a meme. Everything is a joke. That when internet bleeds into real life, that's I think where problems begin.
Could you imagine being 19? When I was 19, I was a complete and total blob of a person. Like I was not a grown up. I was the opposite. I can't imagine myself at that age seeing somebody that I know, another jackass, make life-changing money. There's no way in the world that I wouldn't stop everything I was doing and focus my attention on creating overnight wealth. And you could only imagine the path that leads you down, even if you happen to hit it, right? It's just so toxic and unhealthy for these young people, usually young men.
That's
It's
why
awful.
That's why I color myself lucky for not having lived through the internet or social media at a young age. So I do feel for young people that have to live through this. There are so many more opportunities you can get because of this.
But
I
imagine
think that,
seeing your friend, imagine seeing somebody
oh
you
yeah,
knew make $1 million. Wouldn't you just stop everything that you were pursuing?
right.
Everything.
Right.
Why? I'm not going to class. I could be on the computer. I could be making millions of dollars trading meme coins.
Right. Doing nothing. Yes. Motivation goes out the window. I
It's
agree.
really bad.
But it's not going to get better. Right? What
Yeah.
makes it get
I guess
don't
just to try and make myself not go to a dark place. Every generation has something like this. I don't know, man. I'm trying. It's not good.
No,
I don't
it's, no, it's true. The thing is, young people these days are going to have to experience some sort of comeuppance. We the millennials are more risk averse because we lived through the great financial crisis. The younger Gen Z cohort hasn't had anything. Yeah, they had the pandemic, but guess what? That was the opposite of a comeuppance in terms of finances.
I think, but I don't even know that any sort of like a Trump coin wipeout or whatever would stop them, right? Okay,
No, I mean, I'm talking financial crisis. Like every generation goes through a financial crisis that changes their view of risk or their perception of risk. And Gen Z hasn't had to live through one of those. It could be 20 years until we have one, but eventually that's the kind of thing that alters your perception of risk.
I hope we're making a bigger deal of this than it actually is, but I do think it's a big deal.
That's true. Yes, I agree.
Okay.
Fair. All right. I had Matt make me some charts because I think one of my favorite economic statistics of the last few years is just the fact that we've been in a recession for 2 months of the past 15 plus years. I think it's been 15 and a half years since the 2009 one ended. And so I had Chart Kid Matt do this for me. The National Bureau of Economic Research has this data going back to like the 1800s, but I took it back to the 1900s. And I look at the percentage of time spent in a recession. Maybe this is a good point to my last follow-up on Gen Z. In the early 20th century, something like 40% of the time, we were just in a recession. So like the economy was expanding 60% of the time, 40% of the time we were in a recession. That has fallen. In the 2010s was the first decade where we didn't have a recession. But this has obviously fallen a lot over the years. As the economy has matured, I think you could say, I don't want to say like the US was an emerging market back in the earliest 20th century, but it was obviously not as mature and dynamic as it is today. And then you look at the time spent in bear markets by decades. And it's kind of similar where it was much higher in the past. I don't know what happened in the 1910s where 50% of the time was in a bear market. But as far as I can tell, the 2010s were the first decade ever where we didn't have a recession or a bear market. It's never happened in the history of modern finance.
We had 19.9.
Yes, it was 19.8, I think, in 2018. And I think we called it a bear market at the time. So, okay.
Point taken. That definitely was a bear market, by the way. I will die on that hill. That was and felt like a bear market. It was a bear market.
At the time, we called it a bear market.
It was a bear
we said
market.
even if so we rounded up. But my point is that, yeah, the pandemic obviously was this crazy period of time that was nuts. But in terms of history, we've had it pretty darn easy this past decade and a half in terms of economic and market outcomes.
Counterpoint, the noise has made it 50,000 times worse.
Fair.
I don't think people in the 1980s really thought about the stock market much at all, relative to how much we think about it today.
Or the economy. People,
Right.
the amount of...
It was an afterthought.
Yes, the amount that we talk about the economy is is never been higher. I totally agree.
So yeah, so I think the declines in the recessions have more than been offset by the noise.
That's true. Yes, and if we had a recession 40% of the time for a decade, it was 20-some% in the 2000s because we had 2 recessions in that first decade of the century. But I don't think society could go on. We would all just lay in the fetal position and not do anything with our
Can't
lives.
go on. Must go
Yes.
on. Do you remember that episode of Curb?
Not really.
Okay.
All right, what's going on here? You're the money market guy. This is from Bar Chart. Bank of America via Bar Chart. Money market funds just saw their weekly inflow of $143 billion, the largest since April 2020. What is going on here?
You don't remember the Beloved Ant episode?
I don't think so.
Larry put in the newspaper and they misspelled Beloved Ant to Beloved, and I can't say what the word is.
Oh, okay. Yes, I do. Good one. So what's going on here? Why is there so much money? We're having all this speculation, all this craziness. Stock market's going nuts.
I don't know, man. This is a head scratcher.
I don't have a good answer. Because rates are falling. Is it just because yields are rising on bonds? So people are going, no way, I'm sitting out of bonds for a while. Is that potentially it?
I don't know. There are just some things that don't have answers. So last week saw the largest spike in bearish sentiment from the American Association of Individual Investors. So did people get scared? But it's just so much money. It doesn't add up.
No, yeah, and this to me means more than people getting all bearish on a survey. This is actual dollars.
Yeah, I don't have a good answer.
Okay, so I have a bunch of weird relationships on email with people who have read the blog or followed our podcast over the years.
Okay, define what do you mean by weird?
So I have there's one guy on my blog who I will occasionally hand up. I have a typo or an
a
error.
pen pal? Oh
no, I haven't. And there's this one guy who the only time he ever emails me is saying, "Hey, I think you used the wrong word here, or you misspelled this, and all he does is give me advice on my typos."
Do you engage?
And I would just say thank you. And I think one time I wrote him back like, "Hey man, I really appreciate you give me this because I can read it 10 times and not see the typo, but you read it once and you see it." And he's very kind about it. He's not a jerk. And he's probably emailed me 100 times over the years. Anyway, there's another one where this guy tried to he's a foreign investor from France. And he emailed me saying that I bet that if I just invest in the MSCI All World Index, I'll beat whatever portfolio you could put together or something. And I'm like, oh yeah, whatever, sure. And so every year he sends me an update on this bet that I never really made, but it's kind of funny.
You're holding your feet to the fire. Gotcha, asshole.
So every year I get this email in January, and he said, this year in the MSCI All World, I was up 29%. And I said, no. I said, no, you're not.
Oh, he's using his currency?
Yeah, so I said the MSCI All World was up 17% or something last year. And he said, I'm in France. So I never even, I don't know why this didn't come to me. The strong dollar is so good for foreign investors. This is why all the foreign money is pouring in here. A strong dollar. So he was up more than the S&P because the dollar was so strong. For a foreign investor, because the strength of the dollar is bad for U.S. investors investing internationally, right? That's been a headwind. And we've said that that's actually a potential catalyst for international outperforming is the dollar finally rolls over. But he's saying, no, the strong dollar has been great for us. It supercharged my returns because of the currency. I don't really think about that. Foreign investors have got to be loving this.
Yeah, there's always another side to the coin.
There we go. All right. Another one I had ChartKid make for me. So Don't Quit Your Day Job is this website that pulls together all the net worth and income data. And I've used it a lot over the years. It's like different percentiles of net worth by age and by demographic and generation, all these things. And he has one that looks at the median top 10% and top 5% of income going back to the 1960s. And I plotted this out. And this
does not look like it's inflation adjusted.
This is not inflation adjusted. If you look at my blog post, I did inflation adjusted in there too, or he does at least. But this is crazy to me. So the top 10% in 2014 was $100,000. This is individual incomes, not household. If you made $100,000 in 2014, you were in the top 10%. By 2024, it took $150,000 to be in the top 10%. The top 5% went from $130,000 to over $200,000.
That's wild.
But so the flip side, and the median didn't go up as much. The median went from, I think, what is it? 50 or something by 2024 from 35. So it went up a decent amount. But the point is, that seems like, geez, I'm never going to be in that cohort. But it also means that like the rising tide lifted a lot of these boats, and just people make more money now, way more money now. And it's not like this is like a shrinking pool of people. It's still the top 10% and top 5%. That just shows how these goalposts are constantly moving, and that yes, these prices went much higher, but in a lot of cases for people, the incomes went even higher than that. Right? Top 10% is up 50% income wise.
Well, after the meme coins, it's going to be even higher.
I guess so. Obviously, yeah. And if you do look at the inflation adjusted dollars of these, it's not just inflation. The money has gone further over time. Like the inflation adjusted 1994 level for the top 10% is like right around 100 grand. And so it's actually 150 now.
Think about the composition of individual incomes and the people in that top cohort today versus 30 years ago.
That's the thing. It changes, right? It's not the same exact people.
The ability for you to make more money today is dramatically higher than it was a couple of decades ago.
Right. People don't stay in that some people do, obviously, but you usually don't stay in the same income cohort your whole career.
Because it really used to be doctors, lawyers.
Oh, yeah. There's many other ways to become rich these days.
Bankers, like there's just so many other avenues these days.
I think I've mentioned this before. I remember, I feel like the 90s, being a doctor was like, that was very
prestigious.
Right? I mean, obviously, if you go to a dinner party or some sort of cocktail function and there's a doctor there, people still will like pepper the doctor with questions.
There still is.
Right? Yeah. Oh, you're a doctor. What kind? Oh, really? Yeah. And then you like, yeah, there's some prestige, but it's not like it was in the past. Right? Remember in Eyes Wide Shut, Tom Cruise was a doctor, which is kind of hilarious to think of Tom Cruise as a doctor. But that was like the prestigious big job back then.
Where do you stand on that movie as a TC guy?
It's not watchable. It's like watch it one time and that's it.
I really enjoyed it. I only saw it one time, but I quite liked it.
I've seen it a couple times and I tried, but not one of my favorite TC movies. Just a little too out there for me. All right. A lot of people were sharing this last week. The MBAs in the job market from the Wall Street Journal. The share of job-seeking MBA graduates without a job 3 months after graduation. So for Harvard and MIT and Stanford, Duke, Michigan, Chicago, this has all risen from, it was 15% or so in 2020. It got as low as like 5 or 10% for some of these. Now it's going back up and it's like 20%-ish is the average. And this is 3 months after graduation. A lot of people were saying, oh, this is a bad sign for the job market. The people who are getting MBAs are idiots, obviously. Like, what are they thinking?
This has nothing to do with the job market. I think it's more of a reflection on people not wanting to hire these people. This is more of a reflection of the current environment, I think. And I don't mean the job market.
That's my thinking was, I don't take this as like a terribly bad sign. And I don't know, if 80% of your classmates get a job within 3 months of graduation, that sounds pretty high to me.
I would also like to see this chart zoomed out a little bit, or a lot of it.
Yes. And they also say that at Columbia, MBAs who land jobs tend to get sizable pay with median base salaries starting of $175,000. So to your point, maybe companies are just cutting back on hiring those types of roles, but it's still, I don't know, if 80% of the people in these MBA programs are getting a job within 3 months, that still seems pretty decent to me. I don't think that's a terrible sign of things.
Yeah, neither do I.
Okay.
All right, so Matthew Klein wrote a piece for The Overshoot, where he spoke about a potential inflation boogeyman that nobody's talking about, and it's China. Like, what if there's a recovery in China? So he shows a chart. The pandemic has forced down Chinese consumer spending relative to prior trends, especially for services such as education, recreation, and healthcare. So this chart is showing Chinese per capita consumption expenditures. It's basically their spending. And one of the lines is housing, clothing, food, alcohol, and tobacco. So things that are more or less sticky. And that's been trending a little bit lower. But then he compares it with all the other items, and it looks like, it crashed.
So discretionary items have just, down 20%.
So the Chinese consumer is in bad shape. So he says, it is entirely possible that the Chinese economy will remain in its current funk and continue to be a net source of supply for the rest of the world, suppressing both demand for physical goods and inflation in the US. But if Chinese policymakers arrest the downturn, much less find a way to get consumer spending and bad business investment back on track, the Fed and other central banks might find themselves having to deal with a new inflationary impulse from abroad. Definitely not in anybody's parlay.
That is interesting. It also is interesting that the U.S. is literally like the only country that took off and spent way more money following the pandemic. People cut back in Europe. They cut back in China.
We don't stop.
And
we don't stop. Ben, I was at the dairy barn yesterday. Do you have dairy barns in your town?
No, explain.
All right,
me
so
the
you
dairy
probably
barn.
do, but maybe dairy barn is just the name of the one in my town. It's a little food stand on the corner. At least it's on the corner of one of my roads, and it's like a drive-through, and it's like a mini 7-Eleven drive-through.
Okay, no, we don't.
Do you have
that.
those? No. Okay.
What do you get there? Just groceries?
Yeah, like not like they have they have condiments, eggs, milk, juice, cookies, like.
Got you.
You
Stuff
know?
that you forgot. Okay.
Yeah, that's exactly right. Stuff that you forgot. So I forgot to get eggs. So I went to the dairy barn, got eggs and a stick of butter. And he said $15. And I said, how much? And he said 15. I'm like, whoa. He's like,
how many eggs are we talking here?
A dozen. He said eggs cost me $7. I sell them for $8. I'm like, they cost you $7. He goes, this has never happened before. I've never paid, it's usually never above $5, but he said, and I'm only taking $8 because how much can I charge you guys for a dozen eggs? Wild, right?
He definitely fudged those numbers a little bit.
No. You've been sleeping on the eggs numbers. Eggs are rocketing again.
I still think on a per meal basis, eggs are a good deal. If you count 2 eggs as a meal and you're paying $7 for them, $8, that's a pretty good.
No, it is, but eggs should not cost $8, and 2 eggs is not a meal. Come on.
It's funny though how eggs became the thing, because like obviously the price of eggs are very volatile. We've seen this happen. They spike and then they go back down.
Well, I think the current one is the bird flu is having a big impact, so that it'll pass.
But it's just funny how eggs have become the one thing people have latched onto. Like, why wasn't it milk or something else like that?
Well, because not everyone, eggs are consumed by a lot of people.
But I think the reason people pay so much attention to it is because the price is volatile.
Are you a milk drinker?
No, I'm not 7.
Yeah, okay. There's people that drink milk.
Yeah. Yeah, they're 7-year-olds.
Weird.
My son, he drinks milk.
Yeah.
Okay, good news of the week. I filled this one in this week. This is from the Wall Street Journal. I've often wondered how are self-driving cars going to work on the snow. It's really snowy and cold here. You can't see the lines on the road. How are those sensors going to work? Goodyear says it is rolling out new tech that uses information about the type and make of the tires plus weather information pulled off of vehicle cameras to predict exactly how long it would take to brake in certain conditions. They also said using the front and rear cameras and third-party weather information to determine road conditions, they can take into account the model and age of the tire to create an accurate prediction for how soon a car should start braking at any given moment. They also said they could create even more accurate prediction if the tires in question were embedded with Goodyear sensors to gauge road friction. How much are tires going to cost in the future? Like, I just had to get one.
They're already expensive.
I just had to get one. I drove over a nail and had to get a tire repaired, and it was like, I don't know, $350 for one tire. And they didn't even put it on for me. Bell Tire, thanks a lot.
Goodyear, the worst. What's that from?
I don't know.
Naked Gun.
Okay. Somehow our movie references are never on the same.
Yeah.
But
we're 2 ships passing in a night.
I still think that the sensors and stuff are not, like my wife's car, her cruise control will only work if like the weather is perfect. If the weather's not perfect, all her sensors like lock up and she can't put cruise control on, which is very annoying because sometimes the weather looks worse than it is and the roads are fine. I just think that we're going to get a situation at some point. You see this in the South now with whenever it snows, we have people who live in Charlotte and Nashville and stuff that work for us, and they talk about how if it snows like an inch, the whole city shuts down. Like,
well, you know
people are going to be reliant on like these Waymo self-driving cars in the future, and there's going to be bad weather, and the whole fleet is going to shut down.
Okay, so people that live in areas of snow sort of scoff, like, "Oh, you get an inch of snow and the city shuts down." However, yesterday, for whatever
I don't scoff. I get it because they don't have the infrastructure.
Exactly. So yesterday, for whatever reason, my town didn't put salt on my main roads, and it was a sheet of ice. And like the side streets getting to the main road were a sheet of ice. And so I was slipping all over the place. Like I saw one car almost like do a 360. And it wasn't a big snowstorm, but the roads weren't salted, which is bizarre. But in these southern cities, they probably don't have trucks
Yeah,
with.
they don't have the snow plows. They don't have the dirt. Or
Yeah,
the
they don't
salt.
have
Yeah, you're
those
right.
giant piles of salt to salt the road. So yeah, the city shut down when you can't drive.
Yes. As a northern guy who lives in the north, I'm not going to make fun of the southern people for being wimps when it snows.
But it's not the big whips.
I'm kidding. I know. No, trust me. The first time it snows here every year, people tense up and they drive so slow, and you have to get used to it. All right. I did not realize this. Do you have Sonos in your house at all? Sonos speakers?
Mm-mm.
So I have a Sonos.
You don't really hear about Sonos so much these days. It was very hot.
So listen to this. I didn't realize this is from the Wall Street Journal. Sonos, the company that makes premium audio equipment, rolled out a redesigned app last year that was supposed to improve the user experience and accelerate the company's pace of innovation until one of the most disastrous software updates in recent history of consumer technology. Now, I have Sonos. I just have one of the little speakers. I got it, I don't know, 5 years ago. And then I have one of the little portable ones. So I don't have a huge Sonos system in my house, right? I put it on in the background when I'm reading or something. But I did notice 6 months ago, all of a sudden my app was very glitchy. It was slow. It would like reset on its own. It would not connect. And I thought like, it must be my internet or something, or maybe the Sonos one that I have is 5 years old, so it doesn't work as well anymore. And I didn't think anything of it. But apparently, the app was so bad that they said like for whatever reason, the software wasn't keeping up with the technology, and they had to update the app. And they said people couldn't use basic features. They couldn't access their audio system. And the CEO went out, $500 million market cap is gone. Look at this graph here from when the new app was released and how the company just crashed.
Yeah, not nice.
Look at the product. Look at it over. I think it's down 70% from the highs, and it looked like a meme stock in some ways. But I didn't realize this. So I feel like an idiot for never checking a Reddit board or something to understand why my Sonos app wasn't working. But how is that even possible? This is literally your whole company,
right?
And you fumble this badly. I can't even imagine.
That's odd.
Okay, it was a good product too, but yeah, it feels like a chore when I'm using it now because it doesn't. It takes forever to work. It's a pain in the butt, and it still is.
So I'm looking at Apple stock chart. It's weird. It went straight up and now straight down.
I think you just need to short it and get it over with.
No. Well, no, I'm not. Come on, we're never one of the great American companies.
But I feel like you've been on Apple's corner for a long time, besmirching the company. I think it's time for you to...
No. Well, yeah, a little bit, but more besmirching the stock price. But
yes.
Speaking of and besmirching in the sense that like,
what are you looking at? What are you looking at with the chart?
I don't understand why it was up 30% last year. Nothing happened.
So it's down 15. It's in a 15% drawdown right now.
But it's like straight down, which is kind of interesting. But the reason why I even bring up Apple is because, speaking of like software updates, people on the internet have been all over this, but I found it yesterday for the first time. The photo app update. What in the world? It used to be so easy to find pictures. It was month, day, month, year, whatever.
Yeah.
And I looked at it yesterday. I wanted to show my friends something. I was like, what?
This is a blanket statement, but it does seem like that is one of the things that is lacking with a lot of tech companies is just where's the common sense?
Where's the ingenuity, Ben? By the way,
they have the ingenuity. They're smart. They innovate. The common sense is often lacking.
Somebody sent us an email recommending, or maybe just shining light on the fact that your knockoff AirPods, Ben, they're garbage.
Yes.
They're garbage.
Oh,
look at this chart under random. It's called there's a Reddit engineering porn. Okay. And it shows inside fake AirPods. And it shows Apple AirPods and 2 counterfeits scrutinized with X-ray vision. I have no idea what we're looking at, but look at it, Ben. Look at it.
But the thing is that they last longer than my AirPods. The quality is probably worse, but they still last longer.
Yeah.
Okay. Getting back to our income thing. So Lance Lambert interviewed a mortgage broker from Washington, D.C. in Fast Company. And this was interesting because they're talking about how do people, like how they change their threshold for monthly payments. And this guy's saying my average first-time home buyer now says $3,500 comfortable compared to $2,000 to $2,500 previously. And he's saying like before housing prices rose and rates went up. So this is 4 or 5 years ago probably.
But wait, hold on. Do you think that's a function of, I think it's more of a function of how much houses cost versus how much people are making. Like you just move the goalposts because that's all right, that's what they cost now.
Listen. So those looking for a family house now say $6,500 to $7,500. Previously it was $4,500. I'm also seeing more people comfortable with $8,000 to $10,000 mortgage payments than ever. Honestly, in the first 20 years of my career, I don't believe I ever had a mortgage payment offered over $10,000. Now I have a few of those each quarter.
That's wild. That's so much money.
And so you see these numbers and you go, how is this possible? And obviously it is because prices are, but you go, well, who can afford this? And he says, keep in mind, in my region, incomes have exploded higher. I can't seem to meet anyone who makes less than $130K per year. Those who used to be considered high income, $250 to $300, now make $450. It's just a different world now. Like that's the only explanation, right? People are making more money to afford these.
Yeah.
Otherwise, how does the economy keep chugging along?
Do you think there's anybody who thinks like when we go back to normal is coming?
There's a lot of people who think that.
Never.
That's never happening.
No.
No.
There's no normal. This is it. This is a new normal. Shout out to Muhammad.
Interesting one from the Wall Street Journal on investors versus homeowners. So they say Wall Street thinks U.S. home prices are overpriced. Housing could be overvalued anywhere from 10 to 35% based on how investors are acting. So they say shares of single-family landlords, invitation homes, are trading at 35% and 20% discounts to their net asset values, according to analytics firm Green Street. So you kind of
I dabbled with
right?
these back in the day. Oh man, good thing I got out. These stocks look like trash. American Homes Front is the other one.
Yeah, so it's saying like that the gap of their NAV, like what they own versus what it's worth in the market, is widening. It says it's widened by 10 percentage points in the last year. So there's a big discount. And they're saying if you use that to value home prices are way overvalued. So
Hold on, but that's a stretch. So these are the rent-to-own companies, right? Instead of buying a house, you just rent it from whoever the institutional landlord is.
And they're saying like the cap rate is now 4%, which is way too low when you're borrowing 5 or 6 or 7% to. So it doesn't make sense.
All right, but Ben, are you a buyer? Are you a buyer?
No. But this is the reason why there's a difference between being an investor in homes and being an owner in homes, right? Like you don't have to worry about cap rates when you buy a house for yourself. Right? Where the investors really do have to. So I don't think this says anything about the valuation of home prices in the United States. It just says it's not a very good time to be an investor in residential homes.
I love it. You're spot on.
Buying versus investing.
Yeah, spot on. Walter Bloomberg, real person? We'll never know. Tweeted, in December, Redfin said...
If he's not a real person, then he is the biggest person at risk of AI replacing his job. Right?
Home prices posted their biggest gain in nearly a year, jumping 6.3% to a median of $428,000.
Wouldn't it be funny if lower mortgage rates actually cause housing prices to fall too for some reason? Like it seems like the higher rates are only making housing prices stubbornly higher.
I don't think that's impossible. It's probably too cute for that to like...
It is. I just don't know what stops this train for housing prices. It seems like high rates are good for housing prices because no one wants to move. Low rates should be good for housing prices because it should spur demand. I don't see what
There's no negative catalyst.
Doesn't feel like it. All right, from Eric Finnegan. This kind of ties into our original talk about Gen Z. Gen Z is the most money-centric generation we've ever seen. So they talk about how they ask 12th graders, how important is money and wealth to you? And 36% say extremely important, where for probably 25 years, it was 25, 26% and lower. So you had this whole generation of, I guess, younger people coming up that money was kind of important. Now it's all of a sudden taken off and money is extremely important to people. And this actually makes sense to me with the internet and social media and that sort of thing.
Yeah.
Making it mean more to people. I kind of get it. Why this is happening. To your point, no looking back.
No looking back. All right, Ben, let's speak of, actually, let's look back. Let's look back.
The Wayback Machine.
There we go.
I put it in this
so
week.
So Ben, remind people, because I think we only did this once. We should do this more often.
Yeah, we had a listener of the show who created a randomized chart from any of our past podcasts. And I clicked it this morning, and this one, I believe from the New York Times, popped up. And it was the cumulative monthly job change. We gained 22 million jobs from October 2010 to February 2020, right before the pandemic. And then we lost 22 million jobs in the blink of an eye between March and April.
What a chart. Unbelievable.
I think if you ran the historical simulation of that pandemic happening at any point in time, historically, I think we are in like the top 99th percentile of outcomes of how good it actually went versus how badly it could have gone in so many different ways.
I would say for the economy, yes. I would say the lockdowns in hindsight were not so great.
No, but I'm just saying that the whole how everything worked out
For the economy, yeah.
for everything. It could have gone so much worse. It could have been. It could have turned out to be like the Spanish flu, and it targeted 30-year-olds or something that died. But I'm just saying that I think it went as well as it possibly could have, considering the circumstances. All right. A lot of dollars to donuts feedback.
A lot of dollars to donuts
Craig
feedback.
on Blue Sky says, donuts used to be around 10 or 15 cents in the 40s, 50s, and 60s, so it's like saying 10 to 1.
Makes perfect sense.
That's all we needed to hear.
You know what? I might incorporate that into my language from now on.
Dollars to yes, that's whenever you bet, right? I'm doing a Michael's dollars to donuts parlay.
I do feel like I'm not going to say how I feel, but I do feel like this is the Bills' year.
I hope so. That's a tortured fan base. I'm rooting for them.
We're all done with Kansas City. Everyone outside of Kansas City, no offense, we're all done with it. It's enough.
Yes, I agree. A lot of more people liked my game show idea than you did. You poo-pooed it right away. A lot of people had comments.
Listen, I am a market guy, okay? If the market tells you you're wrong, hand up I was wrong, I guess, because a lot of people were like in support of your idea.
And someone said, the game show you mentioned about people being chased through a city does exist. In the UK, it's called Hunted. Drop someone off with cash and told to evade capture for 30 days. They do celebrity versions, which are funny as they go in luxury yachts. Okay, so I guess it does exist. All right, couple story things. So my kids all are in basketball now. My twins do basketball at the YMCA. So it's like a first and second grade team. My daughter is on one team, my son's on another. So we're there a lot. And so this past Saturday we went there, and I don't think that sports venues and sports infrastructure was prepared for millennial parents and the amount of millennial kids that would be born, because there are not enough courts, there's not enough fields, there's not enough parking, there's not enough stands. We go to the YMCA and there's grandparents there, and there's cousins, or there's brothers and sisters running around, and there's not enough place to sit, and there's just people surrounding the courts. And it's just mayhem. And my wife and I are just like, this is awful.
Great observation. I thought the same thing this weekend, literally. Because the infrastructure's from the 60s.
Yes, they didn't build enough parking spots. Like in the past, not as many people came to watch these young kids play sports. Like we'd be lucky in the past to get one of our parents to show maybe, right? Now everyone goes. Mm-hmm. The grandparents go. There's not enough parking spots. There's not enough courts. So we end up paying more money for sometimes for my daughter's basketball tournaments, we pay like $20 a person to go.
How does that work?
Good question.
No, literally. What do you mean? You pay when you get there or something? How does it work?
Yeah, so they have a tournament at this field house or something, mm-hmm. and there's 20 games going on, and each person to get in costs $20. It's unbelievable.
Just to watch?
Yes. Isn't that insane? She's 10 years old. And we're paying like $90 a weekend.
Hey, don't complain. It's going to be $30 next year.
Probably. Okay. Recommendations?
I got some. Light week for me. Go ahead. What do you got?
I got a lot. A Real Pain. This is the Kieran Culkin, Jesse Eisenberg movie. Okay? I saw a little bit of...
This is you written all over it.
Okay, totally a Ben movie. And at first, when I watched it, I was going to say, Michael, don't watch this. I think you have to watch this movie.
Say no more. I'll watch it tonight.
Okay. This is one of the better movies
Why do you say that?
All right. Well, it's about two cousins. So first of all, Jesse Eisenberg wrote and directed this. It's one of the realest movies I felt in a while. Like the conversations and it's not over the top at all. But it's about two cousins. Their grandma dies. She's from Poland. She was a Jew living in Poland who then immigrated to the United States from Poland. And they go, after she died, she left them money in her will saying, I want you to visit where I was from.
Love it.
And it's 90 minutes, which is a huge premium for me. Kieran Culkin plays essentially a more sensitive version of Roman Roy, but he was fantastic in this movie. And it was just, I don't know, the whole thing, it was just a very well done movie. It's like really good piano music throughout. It's just like a very beautiful movie. I really, really enjoyed it.
You ever see The Squid and the Whale?
Yes.
One of my favorites.
Very good. Jesse Eisenberg is great. And in this movie, he's good too. The funny part to me was, at first he's driving to the airport and he's talking about his son, how he loves skyscrapers and he knows all the floors of the skyscrapers. And this just must be a thing with boys because that's all my son is doing now. All day, every day. All he ever wants to talk about, since we brought him to the Hancock and I went to the Empire State Building, All he wants to talk about is skyscrapers. The Burj Khalifa is his favorite thing in the world. That's all he wants to go to Dubai for spring break so he can go see the Burj Khalifa.
That's hilarious.
Yes.
Did you watch Severance yet?
Yes.
I'm in a holding pattern. I'm gonna wait until a few episodes get backlogged.
I wish it was a bingeable show. I told my wife, God, I wish I could just binge this show. We watched the finale again. I forgot how good it was because it's been a while since it's been out. By the way, A Real Pain is on Hulu.
Oh, fantastic.
Yeah, so you don't have to rent it.
Speaking of finales, the finale of Landman, they landed the plane and I'm excited for season 2. Jacked up.
Okay, good. We're halfway through. I will pick up. Conclave is on Peacock. You heard of this one?
I have to finish it.
Okay.
I love Ray Fiennes. One of the best.
So my wife and I commented on this. He is one of the most believable actors of his generation.
He's one of the best.
Every role he plays, like you believe him as this cardinal, right? Yes, I guess it's one of those. It's a film. It's probably too long, but it's just extremely well done. Yeah, good stuff. Finally, American Primeval on Netflix.
Oh,
you heard of this one?
Oh, I forgot. Yeah, I watched the first episode last night. Super violent.
Super violent, very gritty.
I'm in.
Pete Berg did it. He's the guy who did Friday Night Lights, and he has Taylor Kish in it, who is Tim Riggins.
Which character is that? Taylor Kish?
Yeah, the guy with the long hair.
Mm.
He, who should have been a bigger movie star for some reason and just wasn't. I think it's because...
Oh, you know why? It was John Carter.
Yeah.
Ruined his career.
Another one, my son loves that movie. But yeah, it has a feel of Revenant to it. But when you watch a show like this, because I guess it's kind of historical fiction, because it is about the Mormons coming and Brigham Young, but do you get the sense that, like, man, we know we've talked about this in the past, but how awful would it have been to live during that time?
Oh, I just think about how bad everyone smelled.
Yes, everything is so dirty and smelly, and like, oh, this guy said something I don't like, dead. I'm gonna kill him. Right? Just no like there's no like squaring up like in a fight video on the internet now. It's just like, no, I'm gonna shoot you in the head. That's it. I don't agree with you. You're dead. But the fact that people still, because this is the Howard Lindzen point earlier about people were getting killed in the past, but they still went west anyway. That they still had this hope to go west despite the conditions being so awful and taking God knows how many weeks to ride a horse and carriage through the rough terrain to get there.
Yeah, there's no stopping progress, even though at times like there's some dark stuff out there. Yeah. This is a wild one, Ben. Really, 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 really and truly.
A wild what?
Weekend with the Trump coin stuff. And then Melania coin. Oh, we didn't even talk about Melania coin.
Okay.
The
thing is, you said this is the craziest thing you've ever seen, but I don't know. For some reason, this stuff doesn't like, there's no shock value anymore. Like, I guess I'm not surprised by this stuff at all.
They launched Melania coin on Sunday to nuke Trump coin.
Boy, that's got to be a weird, like, bedtime conversation. Like, let's check the market caps to see which, like, between husband and wife, which one of their meme coins is worth more these days. But don't you think that every influencer on the internet is going to want their own meme coin now? Just for, like, cachet and... Yeah.
All right, Ben. Stay warm, I guess. I hear it's cold out there.
It was -8 wind chill. The thing is, getting back to being wimps like on American Primeval, like I hit the automatic starter on my car and I get in the car and my heated steering wheel is on and my seat is got a heater on it too. And I don't drive a luxury vehicle. I drive a Ford Explorer. And we are so much more spoiled than people were in the past.
Yeah.
So it's much easier to handle than it was. If you're an advisor, check out The Unlock. AdvisorUnlock.com. We'll have more of that coming in the weeks and months ahead.
Mm-hmm.
Anything else to plug?
Nope. Naples, etc. All right. Animal Spirits at thecompoundnews.com. Thank you for listening. Stay sober. Have fun, but not too much fun. We'll see you next time.
It's going to get crazier.
It's going to get crazier.